Good morning, afternoon, and evening, traders. Welcome to December of 2020. I hope you all had a fantastic month of November and you're getting ready to rock and roll coming into the new month here. First things first, we always want to double check a few things going on, like news and events and holidays, especially around now. So let's take a look at that first. From the news calendar perspective, it's really quiet. As far as large news announcements go on the 1st, 2nd, 3rd, and 4th, basically the first half partial week of the month was a lot of big heavy news. And now as we're going into the week ahead of us, coming into the week of the 6th and going forward, we don't have anything. There's no big news for this upcoming week. And as we look at the next big announcement, that doesn't happen until the 16th. So on Wednesday the 16th, then we've got a few things. We've got 8:30 core retail sales and retail sales, as well as 2 p.m. FOMC economic projections, FOMC statements, federal fund rates, and then FOMC press conferences at 2:30. So the 16th is a big day of news. Mark that one on your calendar. You don't want to forget about that one. On Friday the 18th, we have the flash manufacturing PMI at 9:45, and then Saturday the 19th, all day the OPEC JMMC meetings. And that's it. We don't have any other big news announcements for the rest of the year. It's a very quiet month, and maybe it's a blessing in disguise. I don't know. We'll have to wait and see. All things considered, though, it's a relatively quiet month in terms of large news announcements. Now, looking at the holidays or anything going on there, we don't have any holidays coming up this week, but obviously this is December, so as far as a monthly perspective goes, well, this is a pretty big one. Usually the last couple weeks of December, people take off, or they start taking off, so that's when volatility starts potentially going up while volume starts decreasing, and the only reason that volatility goes up is because of the lack of volume. There's nothing to stop these moves from happening anymore. That's not always the case, and we'll get into a few different things that stand out here, but realistically, this is December, right? We're only going to get the first couple weeks here, first maybe 2.5, 3 weeks, and then it's pretty much over for the rest of the year. So from that perspective, obviously, keep that in mind going into the month ahead. So first up, we move into the NASDAQ, and the big thing, obviously, with the NASDAQ is that it keeps pushing into the highs. We're back to all-time highs. The market continues to drive higher. It's not pulling back, and as long as it continues to drive up, well, buyers are assumed to, well, be in, right? Now, looking at historical information, over the last 10 years, 5 Decembers have been up, 5 Decembers have been down. All of them are relatively small, but there were a couple in there that were relatively large, and the large ones tended to be down. Now, there are a few caveats to that. If the November preceding the December was at all-time highs, December had a lot better chance at being at the highs by the end of the month. Well, if we look at November wasn't technically at the highs. That's not a good sign. I know it's really close and it's, arguing semantics, but based on what we've seen historically, 4 of the 5 down days that occurred were with that as a trigger, right? If it wasn't at the all-time highs, then typically that following December was 4 out of 5 times a bear day. So given that we are at all-time highs, but it missed it, and now we're trying to push back up again, I don't have high hopes for this one. Historically, it's only got a 20% likelihood of being bullish, given what we know so far. Now, the overall movement to the upside, obviously the market is very overextended. We're not seeing any increases in volume that would suggest that buyers are taking profit or new sellers are coming in. But we do have a lot of zones of interest if the market wants to pull back a little bit. Now, if the market wants to dip back a ways, we've got major support that starts coming in just around those 12,200s on the more aggressive side. Those are those previous peaks kind of coming back into play. If it wants to dip a little bit lower, obviously you've got that next zone of support just around 12,000 or even a little bit underneath it. seems where most of the action was taking place. And then if it wants to dip below that, there's not a whole lot left inside of here. I mean, there's that major swing back at around 11,500, but that's a pretty wide open door, right? There's not a whole lot to hold the market up. And if it's going to dip a little bit further, it's more likely that it's just going to re-challenge the previous bull start of the entire thing, more down towards the 11,200s to 11,400s. And then, of course, there is always the last ditch if it wants to go all the way back down, which, I mean, I don't think that's going to happen, but, you know, it's a possibility, I suppose. Then we've got support all the way back down at the 11,000s as well. So the big thing that really stands out here is that we're trying to break out of an ascending wedge and an overall sideways market condition, right? We have a sideways wedge with an ascending wedge attempting to break out. I think the best bet for buyers right now would be getting that pullback to retest that previous wedge support and then get a bounce off from there. Now, it might not be able to rally all the way back up, but where it is now is just so overextended to the upside that it's pretty tough to want to be a bull way up here. And then over to the S&P, we have a similar situation with the market pressing into highs, and a similar situation in that the last 10 years, 5 were up and 5 were down. But the similarities kind of fall apart there, because typically the big mover in December tends to be the S&P. Go figure, right? It's slow everywhere else, but when it hits December, the S&P does tend to get quite a bit of volatility. So we're seeing this continuation to the upside. We're not seeing any increases in volume that would suggest that buyers are taking profit, but there are a few things that obviously stand out here. We have the overall channel in this case rather than a wedge. Now, there was a wedge that the market broke out of, held this support multiple times. Nice little breakout pullback. But if you draw these 2 points rising higher, it's too shallow, I can't do it. But if you draw those 2 points together and then copy paste it on up to the highs, that's right exactly at the top of that wedge that it's getting stuck at now. Now, another thing to consider would be maybe a spike in channel or even a spike in wedge, something along those lines that's trying to rally the market higher. But either way, it's really far up and it's really, really overdone to the upside. It's desperate for a pullback, but we're not seeing any volume coming in at the top. And as long as nobody's selling, well, market's going to keep going up, right? So that's kind of what we're waiting for, is when are they actually going to start pushing back? Is this whole thing just going to be a big giant Santa rally and then January ends up a mess, or what's going on? Now, if it does want to pull back, we've got a couple higher end, more aggressive side ones, and then it's just this wide open space where there's nothing to hold it up until all the way back down to the lows. So the first zone of support is going to be back down towards the 3600s, all the way down to, 3575. Below that, the next zone at the base of where all of that support came in, that's going to be back towards the 3550s, with a bottom edge around 3500s. 3500s was a mess, so being back there wouldn't be a surprise at all to see it become a mess again. But that's where things get a little bit tricky, because if it does break down, they have the retest of the wedge, right? I mean, that might come into play, but that's it. Right? There's nothing else to hold the market up. And that's when you start seeing it slide all the way back down to the wedge lows, which lines up right with the start of that bull leg. Everything lines up perfectly for a really, really nice zone of support around these 3300s. And I know that's a pretty big drop from where it is right now, but man, if the buyers are looking for some real meat on the bone, that's going to be where it's going to happen. Then on over to gold, and we can see more messy Decembers, right? The last 10-year study shows 5 up and 5 down again, giving no real bias at all. As far as gold is concerned, it's just kind of descending down in this wedge. But one big caveat that the bulls do have is that this descending wedge attempted to break lower, and so far it's failed. That's great, because if the buyers are able to maintain that structural support, which they've got a really good bull bar at the bottom to do, then realistically that whole base should act as a level of support to try to kick the market back up to, the highs of the wedge, wherever that ends up being at the time. Now, if it does end up getting a push back down, that's where we're going to have to see if they hold a higher low. Sellers are going to want to hold that inside push back down, and obviously buyers want to see that fail. And if that's the case, if it does start breaking down even further, then gold might be able to start dipping down to those major levels of support in the 1700s. It's really not that far away anymore. Below that, you've got the 1650s, and that's going to be kind of the big zone of interest. But as it stands, the bulls still have a shot. We've got a really nice rotation back inside the wedge, and this is kind of their chance to sort of, muscle up and take it back. We're not really seeing a huge amount of volume increasing, and if we look at the overall volume that happened on the bottom, we did see a nice bump to the upside. And realistically, every one of those moves was led into with a nice bump into the upside. So we've got good volume built into the lows. Now it's just a matter of seeing if that was enough to get it going. Because realistically, you want to see those lows end on a kind of a climactic run, and we haven't had that yet. There's not really been any increase, which if the bulls are going higher, I guess that's a good thing, but it would be really nice to get some volume to give us a clue as to where it wants to go, especially with a 10-year 50-50 rate. We don't have really good odds in terms of trying to figure out where it wants to go from here. So, I mean, realistically, I've got a bullish bias if we can stay above the wedge, and if it starts breaking down, then looking towards the bottom and seeing if it wants to fall apart. Switching gears over to crude oil, and we've got a little bit more of a bullish bias. The last 10-year study showing 6 up, 4 down. And the overall movement is pretty strong to the upside, right? We've got a very strong move going higher and really no pullback. So as far as bull trends are concerned, this is a very nice move that could be leading into an ascending wedge. But you'll notice it's very early into that wedge. It still has plenty of time to knock around, and an up move for continuation higher makes a lot of sense. So it kind of lines up with that kind of pre-bias. That said, we don't want to get lost in the biases here. Looking at the downside, if the buyers can't rotate higher and crude oil breaks down below this rising kind of aggressive ascending wedge, even if you drew it like, even a little more aggressive, it might have already broken. You can definitely argue a reason for sellers to want to try to get this to really tank lower, pardon the bad pun, back down towards the $40 mark. That $40 mark was a huge zone of rotation where when the buyers got above it, it was launch pad. And, well, I mean, realistically, what better place to pull back to if it wants to dip than back to the $40 area. Huge amounts of congestion around there. So realistically, as it stands, we've got a really nice rotation failure to the downside, popped right back up again. And now we're seeing the sellers who got suckered in basically on the short side here, they're getting squeezed and the market is continuously pumping higher. And that gives really good bias to the upside. But if it does fail, we've got a game plan there too to try to look for a larger rotation back down again. Moving over to the currency side of things, looking at the euro, we can see the euro has an even stronger upside inclination going into the December month, with the last 10 years showing 7 up and 3 down. Very good odds for the buyers to try to continue the move. And if we're looking at the overall structure of things, obviously the euro has been really strong. I mean, there's no other way to really say it. It's been just screaming to the upside. And once this kind of downside resistance broke out, it was game over. Now, it would love to see a pullback to that big 1.12, 1.13 area, kind of get a retest of that falling wedge. But as it stands, it's fairly obvious that we've got some pretty good rising support. And even if it does pull back, it's just going to bounce around the 1.16 area anyway, which lines up with a megaphone bottom. I was going to say base or bottom, somewhere around there. So there's a lot of levels of support that line up beautifully around that 1.16 if the market does want to pull back. But knowing that we have a long-term upside kind of bias, realistically, this looks like it's in a very strong breakout mode, and it wouldn't be a surprise at all to see a good chunk of December being continuation to the upside before pulling back. If it does want to pull back in the nearer term, obviously previous bull bar lows, those are going to be zones of support, and then a big one is going to be the base of that bull launch. That's a huge one that's going to have a lot of eyes on it. That lines up right with the previous swing high. Lots of structure around that zone, and that zone, let's get an actual level here, 1.195-ish. That's going to be the big area of interest for the market to want to pull back to, not only for sellers' profit targets, but for buyers to potentially re-enter for that uptrend back up. And even if it does take a little bit of time to pull back towards that area and come into late December, that could still be a strong enough area to light the fire to get it to still close bullish by the end of the month and the end of the year. So don't count the euro out if it's pulling back early, because there's a lot of support down there. And then on the cryptocurrency side of things with Bitcoin and the last 9 years, I had to do 9 years because that's just as long as Bitcoin's existed. We've had 5 up and 4 down as far as the month of December goes. And realistically, you could see that with the price action the way it is, it wouldn't be surprised to see a 6th up in the sequence. It's nice and bullish, and the market's rallying aggressively higher. Had a nice little washout here, kind of late in, kind of late in November, right in the beginning of December, which rallied back up. And from here, fairly nice little pennant wedge formation going on that may find some bullish continuation to break above that 20,000 and really start ripping to the upside. A lot of that upward movement could see some explosive, just catatonically bullish movement. If you look back at the previous major runs, the big blow-off move into all-time highs was December 2017. Right, this is the same time we were trading around this same place, and everything is lining up. But the difference is, it's almost like it's a little bit ahead, or a little bit behind, depending on however you want to look at it. What I mean by that is, if you look at the longer term, this is the monthly chart on Bitcoin, you can see that the last time, this is December 17, it ramped up and there was this giant wick on the top that was the blow off. And before that was a really nice strong bodied bar, and before that was a really strong brick topped bar. Well, if we look at the overall sequencing to the upside, right, if we go backward just a little bit to see some repetitious patterning here, what's been going on? We've got a really strong bull bar closing on its highs, then we've got a weak little bear bar back down, strong bull bar back up, a strong bull bar with a bit of wick on the highs, and then that blow off top. We see the same thing. Strong bull bar, blow off wick on the top. Strong bull bar. You kind of see where I'm going here. It wouldn't be a surprise at all to see Bitcoin tagging into the 30,000s by the time we go into the end of December, and then seeing it fade off, get that big catatonic blow off on the highs, and then pull back from there. And who knows, going into the following year after that, or maybe even sooner, we might see Bitcoin all the way back down to the 6,000s again. It's certainly not going to get married to it up here, that's for sure. But we haven't had the blow off top, and that's really what I'm looking for next. Switching gears over to the stock side of things, first up, what a shock, we've got Apple. Who would have thought? Now, Apple is in a very interesting situation at the moment, because where it stands, we're coming in after the split and after we had that really, really strong earnings rally to the upside. That earnings candle, if you're not sure, you can see it over here. That's that red E. And then there was another one right there. And we've got another one on the horizon coming up. And realistically, the way that it's been going for Apple in general, we're getting a beautiful wedge, which is attempting to and has already broken out of. And not just broken out of, but a gap broke above it. That's a great sign for buyers. So buyers are going to be looking for a pullback at around that 118 area to look for a ping back off to try to rocket ship the market back up towards those 140s and kind of see what they want to do back around those highs. Be careful around the high closes up there. That big blow off candle top around 130 could act as a lot of resistance. It's an open gap up there. And if it wants to go up to the highs, obviously the open will be a zone of interest, the 140s, a little bit ahead of it. But Apple is gearing up to be a very, very interesting one going into December. Next on the stock list, we've got Alibaba, that's symbol BABA, and this is setting up to be a very, very interesting play. First off, the big thing that you can see here is the potential for a wedge bottom. And with that wedge bottom, there's the potential for this little kind of channel-ish play going on. But you can also see how this got really aggressively bottom weighted. And on that bottom, it formed that really nice pennant and it failed to the upside. Now buyers are trying to get a higher low. This is going to be a big zone of interest because if the buyers can hold this and get a break to the upside, get around those 280s, maybe even a little bit further, then buyers have a shot to try to take this and rocket it back up towards the 300s to finish the job up there. There is also that open gap above 300 that might be looking to kind of finish too. But this higher low is setting up some very good momentum higher. We haven't seen the CCI shift. It's still in the negative, so it's still not quite there yet. MACD is still down. It's still a bit early, but it is certainly on the radar. And then next on the list, we have Farfetch, that symbol FTCH. And obviously this thing is massively bullish, but I don't necessarily want to be a buyer way up here. What I would love to see is a quick little pullback or a dip flush back down towards like the 53s. Would be even nice to see like the 50s. That's a big zone of interest. And by the time it got there, the moving average would be starting to pull back as well. This is a ridiculously bullish move and buyers are just waiting for a pullback. The big thing is, when is that pullback going to happen? And I think realistically, given that it's just staying pinned to the highs, the last time they had any decent pullback was after a big gap up. And well, I mean, until we get that, we're probably just going to keep on grinding higher. So we haven't had a big gap up. Once we get that big gap up, probably see it stall out for a little while, but at the moment we're still grinding higher and continuing back to the upside to make a lot of sense. But man, a nice little pullback or a washout quick back to the moving average would be a fantastic bounce point. All right, well, that's going to do it for December. I hope you have a fantastic month ahead. Stay safe out there, keep those stops in play, and let those winners run. And of course, have a great holiday season. Have some time with the family, however that's going to work out this year, maybe virtually or whatever. But either way, try to enjoy it as best you can. Stay safe out there, and we'll see you all back in January. Thanks.